No, you're laughing here. Why?
Yeah, because whenever you have a proliferation of fraud on a massive scale, as we've seen now recently with Chinese companies, it's a very, very clear symptom of a bubble, of a mania. And of course, you have more fraud companies, Chinese fraud companies in the US, because the public doesn't know anything about China. Secondly, here in Hong Kong, the regulators are also relatively lax. But if you cheat Hong Kong Chinese, you have to watch your kneecaps. Maybe you don't have your kneecaps anymore. So I think that people are very careful in cheating Hong Kong people. Plus, the Hong Kong public is not totally stupid like in the US. People go and buy anything. They buy anything. Here in China, it's good, growing. China will be the biggest economy. Probably it is already in many sectors the biggest economy. But it doesn't lead necessarily to making money. In America, in the 19th century...
Yeah, but who does make money out of China?
Well, you know, in the 19th century in America, you had canal booms, railroad booms. Foreigners were always taken to the cleaners, repeatedly. And in China, the people that make money are the locals. It's like the people that make money here in Asia are mostly locals. There are some foreigners that have made money, but by and large, it's a local story.
You made money?
Yeah, depends what you mean by money. Yes, I mean, I have some money, but I'm free. Let's put it that way.
Well, let's hope so. Otherwise, you shouldn't be on the program.
I'm not like Mr. Bernanke. It's like the other day, a Fed governor said, if I had money, I would short gold. Well, if you're Fed governor and you don't have any money, then you shouldn't be there in the first place.
Okay, right. Marc Faber, also, let's just talk a little bit about what you do to make money in this part of the world, then.
Yes.
What are you invested in? Do you like the commodities story still, or do you believe in China having this straight-line growth? What happens?
Well, the general background is we had a bull market, essentially 2002 to 2007, early 8, and then we had the crash, the financial crash in 2008. Then we came into the lows between the end of 2008 and March 2009, S&P at 666 on March 6, 2009. Then we had a huge bull market. First peak of this bull market was actually in February 2010, the S&P at 1219, and then we made a new high on the S&P, now back in March at 1370, but the majority of stocks did no longer go up. It was a small number of stocks that made new highs. Since then we've gone down, and I think we've seen the high for the year. I think the Fed, they could print money, QE3, QE4 and so forth, but they're going to wait, because Mr. Bernanke very clearly understands. A year ago, he talked about deflationary pressures. Now he can see that his money printing has led to some unintended consequences. So it's going to wait until the S&P is down 10% or more.
Very quickly, Marc Faber, I've got to get one question in about the commodity side of things. I mean, the commodities boom, is it intact?
Yes, I still like gold and silver, but I think they'll go down for the next 3 months or so. But I wouldn't short them, and I keep on accumulating gold. But I think gold in the long run, not to own any gold is to trust central bankers, and that you don't want to do in your life.
Marc Faber, thank you very much indeed.